Good morning or good afternoon, wherever you are at. Hey, take it easy, Brenda. I was, I know I was getting close. I was out fighting the coffee machine, trying to get it. It wasn't putting out coffee. It was giving me some air. And then I looked at the clock. I'm like, oh, I better go. So I don't have any coffee. So hopefully I don't fall asleep on you. I shouldn't. I've had 3 cups already. I just needed one more because I didn't get a lot of sleep last night. So, but that's all right. I'm used to it. So how's everybody doing? Y'all have a good Christmas and New Year's? Hello, Donald. What's up, Kevin? Kentucky. Any wildfires out there? It's sad. I mean, it's all the stuff that's going on in LA is, I mean, it's sad and devastating, but it's also as bad as it might sound, it's like, you vote in a bunch of idiot politicians that don't do the right thing and make sure that stuff like that doesn't happen. And granted, some of it's going to happen, but there's a lot of it could have been prevented. So it's sad. It's sad, but I think people are starting to wake up and realize that, trying to protect a little tiny fish is not, is maybe not as important as protecting human life. I mean, last I heard, there were 5 people that lost their lives. So, I mean, I think everybody wants to protect wildlife and fish and stuff like that. But at the same time, there's got to be a balance. And there's no balance right now, as far as I'm concerned. But anyway, started off with a little politics. One of those third rails you're never supposed to touch, right? But anyway, let's get to the topic of the hour. Let's get to what we're supposed to be talking about. I don't know why I got off on that tangent, but um, I like squirrel, put it that way. Those we need to protect, squirrels. I'll keep them alive for sure, no problem. 10, it's doubled since yesterday. Well, yeah, I think I heard yesterday it was 5, but yeah, it's sad. It is. So I just found out a friend of mine's dad passed away this morning. So I mean, it's always sad. So, but I'm not a registered broker dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So, well, here's what's coming up. We got the Fibonacci Trading Mastery on the 10th. What is today anyway? The 9th, right? Or is it? What is the 10th? They lose track of time. It is today. That's tonight. So awesome. Inner Circle. It's crazy. My sister just turned 40 on the 7th. So I was razzing her a little bit. It's like, welcome to the old people club. She's been 30 until 3 days ago. In her 30s, I should say. But so, and she couldn't get mad because she had a 4-month-old baby in her arms. She's like, hey, I can't rage with a 4-month-old in my arms. Like, all right. Oh, okay. Thanks for letting me know that, Trip. So the Trip just let me know the Fibonacci class for tonight apparently was canceled. Rob has lost his voice, which I'm gonna hope I don't do, but I don't think I will. But I got another friend that just messaged the other day said they have COVID. So inner circle. So yeah, I don't know. Keep an eye on all the stuff coming up for anything to Rob's in the next probably day or two. I don't know how long it's gonna take him to get his voice back, but which he talks so much, it makes sense. I would understand. So I don't do nearly as much as he does, but Inner Circle the 17th or 13th, 17th, and 18th. I mean, you can all see the times there, right? Mastermind group coming up January 14th, 21st. Monster Market Movers January 21st. Power Hour every Monday at noon. And this one, Trading Coach Playbook, every Friday at noon. And then you got Power Option Plays Monday and Thursday, Cover Call Explore with Trip on Thursday, and the Evening Think Tank with Brandon Monday, Wednesday, and Thursday. So that is what is coming up. Of course, all the social media outlets you can find us on, follow us on. And if you like my style of trading, which we all have our own style, or if you're still trying to figure out your style, it's good to test out, different people's uh, coaching, the products, classes, whatever we have, because then that's the best way to figure it out is to try them all. So, and that's what I did. I started, well, it's been April of 2000, so almost 25 years. And I just went to town trying every single strategy, listening to every single coach that I was able to be in front of. I was blessed big time because I got to go to work for a company that taught this, and Um, so I was getting paid to sit there and learn. I mean, I was working, but at the same time, I'm taking notes and learning, and so it was a massive blessing for me. So I wouldn't be where I'm at today without it. So I'm very thankful. But that gave me the opportunity to sit in front of a bunch of different coaches and hear a lot of different perspectives, a lot of different points of views, and I think that's good. That allows you to develop and see where you're at, not only from a mental perspective, but what style is best for you. Whether it's, some people try day trading, and day trading is brutally difficult. I mean, generally speaking, the shorter time frame you squeeze trading into, the more difficult it becomes. And if you're trying to pick a point and be in and out in 15 or 20 minutes or 1 or 2 minutes, it's excruciatingly difficult. I mean, it's easy to trade, but to be consistently profitable in all market conditions, and there's the caveat, right? You got to qualify that statement, because you know how many people made a fortune in between 95 and 99? Lots of people. You know how many people lost it all in 2000? The vast majority of those people. So it's easy to make money when the market is going one direction and it's not crazy volatile, or it's not choppy, or it's not this, or it's not that. But when market conditions change, can you survive or not? That's the true test of a trader. There's the old saying that you've probably all heard is, don't confuse brains for a bull market. And a lot of people did that in the late 90s. And people are doing it right now. They think they're geniuses. People did in 2020. When COVID happened and the government just dumped a bunch of money in people's lap, and I mean, the largest inflow of money into trading accounts was that year, because people were sitting home. They didn't have anything else to do. They weren't working. They couldn't work. Yet they're collecting all this cash. What do they do with it? Well, let's trade. And so they did. Robinhood started. I don't know if it was already, I think it was already going, but I think they leveraged that situation and blew up their business. Not blow it up, but I mean blew it up in a good way. Like huge. They got huge because they marketed to these younger kids that were brand new to trading. So, uh, and a lot of people in that time, especially when it was rocketing north, because all these people were pumping money into it, they all thought they were geniuses. I read an article a year or two ago. This kid he went back to work waiting tables or something like that. He wasn't making a ton of money. I mean, he was getting by. He's a young kid. He's 20 or 21 or something like that. And he would try to day trade in the morning before he went to work, and then he'd come home and he'd see all these trades that he missed, and he got mad because he's like, I could have made 4 times as much trading today than I made at this stupid job. He finally quit his job. But then guess what happened? He didn't survive because it's different when you're sitting in front of the computer and it's happening live. When the bullets are flying, right? Everybody has a plan when you go into the fight until you get punched. Was that Mike Tyson? I paraphrasing, obviously, but um, you've got to be able to plan for that. You've got to be ready for it. And if you don't know how, then you're going to die. And that's, it's easy to look back historically and say, you could have done this, you could have done that, and woulda, shoulda, coulda syndrome. But it's very different when the bullets are flying. So, um, welcome to trading, Jennifer. I know I say that a lot, but and I don't mean it. It's not derogatory. It's not negative. It's just it's the reality, and that is what happens, right? Um, the first thing to do is remember that. Well, here's what she said. I don't think you care if I share this, right? Um, December 6th. That's only a month. That's like a month and 4 days. She said, since December 2nd, my account has been brutal. It was at the highest point, thought it would continue, but no, it's hurt. Need to lick my wounds and pause or continue. And that is the natural course of trading. If you haven't heard that, then it's good that you do, because that is normal. Just like a stock, look at a stock chart. They don't just go to the moon. They go up, then they retrace. And your trading account should look the same. You're going to go through periods. You're going to go through slumps. You're going to have times where it's just a natural, if you get heavily loaded up on one side, which I do sometimes. I try to keep things pretty balanced, or I don't put a lot in. But right now, I mean, I've expected this drawdown for a while, and I've been in a couple of trades for several weeks. And some are, I mean, I don't even have to worry about the positions I'm in because I've already collected enough profit that even if I lost everything that's there, I would still be profitable. But I'm heavily loaded up on the downside. And so days like today, I'm loving it. But I was expecting this, I was looking for it, and I was positioned for it. Um, but when the drop ends, I'll either have to move back to the sidelines or the odds are I'll give some of it back. So it's what's your experience is normal. And I know it's not fun. And that's part of that's the mental process is realizing that what you're experiencing, those drawdowns, those are a natural, normal part of the process. And so, yes, it hurts until you convince yourself and you recognize that that's not a big deal. If what you're doing is working to get your account to grow, then yeah, either lick your wounds, pause, sit on the sidelines, get your head straight first, right? If you are in that place where you're mentally like, if you're on tilt, if you will, if you're a poker player, you know what that means, right? If you're not able to make solid decisions because your mind's not there because you're frustrated or you're aggravated because you had a drawdown, then get your mind straight first. But I think the biggest thing is to realize that that is normal, that is natural. And there's the key right there. You're still profitable. So when you look at the big picture, it's good that you're up, but last month you lost half of your profits. All right. That's, well, it depends on how aggressive you were getting. And realistically, I mean, if you imagine, um, okay, I'm not 100% following the numbers, but it doesn't matter. I mean, because I'm just talking conceptually now. Is well, here's the thing: if you did it one time and got it to go from here to there, from 100 to 200, whatever the numbers are, then you can do it again, right? And it may not happen in the same time frame. A lot of it depends on what you were doing, right? Sometimes you will have really quick advances, like if something really drops or goes up big time, and you make a lot really fast. Realize that's not normal. That's not something you're going to continue to do day in and day out. I mean, that's like a batter having one baseball game where they hit, they get four at bats, they get four hits. That's not normal. There's 165 games or so every year. They don't sit there and go, "Oh, I'm gonna keep this trend up. I'm gonna keep hitting hits every single four hits every game." It's just not possible. It's not realistic. So, um, first recognize that if you've had a big giant rush like that, the best thing I would suggest you do is take your profits, sit it out, because what I read you say is, I thought it would continue. And let me guess, your mind started going to buying a new house, buying a car, doing this. You started seeing all the lifestyle changes you're going to have if you can keep this train rolling down the track, which is natural. Okay. I know that because I've done that. It's like, oh man, now I'm here. I could do this. I could do this. I could do this with this. And it's a normal, natural thought process. That's what we do. And you get into that fantasy land and you forget about reality and that trading is brutally difficult. And all that big profit you just made, you're probably going to give some back. The key is to capturing it and keeping as much as you possibly can and not give all of it back. Because one of the things most people do is they get all excited about it and then they give it back. You go to the casino, right? You put 20 bucks in a slot, you win $1,000. What do a high percentage of people do? They put it all back in the machine because they want a bigger prize. That's an addiction. That's you need that high of winning. That's not a good place to be when it comes to trading. Yeah, that's what I'm hitting on right now is it does still hurt. And I can tell you when you say I'm thinking I can do it again, don't think you can do it again. No, you can because you did. The fact that you did it, okay, because I know exactly where you're at right now because I've been through this multiple times. And that's why I know it's normal. And I've experienced it. I've been in the exact same place. It was like, you get frustrated. You just kick butt for a while, you go on a streak, and then you want it to continue, but you got to also be realistic, which I hate saying that but at the same time, you do, right? Just like batters, you're not going to hit 1,000 for the entire year. In fact, if you hit 400, if you're in the majors, right, that's huge. For kids or turn that thing off. Um, so yeah, it's and that's one of the reasons that I use the baseball analogy a lot. Is I mean, I played baseball when I was younger, for I don't know, since I was probably played t-ball when I was 3 or 4 up until sophomore or something. So find something in life that you can relate it to. So you can get your mind straight and be like, okay, it's like this, right? Because I go back to the baseball thing or poker. I love playing poker, and poker and trading are synonymous, right? Same thing in poker, right? And if you watch poker on TV, you'll see it, right? Some guys get a big stack and then they give it all back. The goal is to grow your stack consistently, right? And then sometimes you get a big win. You go all in and you win a big old pot. Then your job is to hoard that cash and not waste it on stupid plays. Same thing with trading, right? When you have a big win, you hoard that cash, and the first thing you do is get your mind back. Same thing in poker, right? You go on tilt. If you get beat really bad, like right now, you're on tilt. If we were in the poker world, you're probably on tilt. It sounds like your mind's not straight, and you start making stupid plays because you're chasing that high that you need instead of being rational and logical and saying, here's the odds and here's how I need to do this, and playing the way you should play. So get that before you even trade again. If you're not right now, get your mind straight, but find something that you can relate it to and go, okay, it's like this. And so when you get into this place mentally, you can go back and go, oh, it's like that. Okay. And I use baseball because most people understand the basics of baseball and batting average and all that stuff. So it's a good analogy that the vast majority of people can understand. But it's something I go to as well myself to get my head back into the game and go, okay, I had a great streak, I had a great game, but now we're on to a new game. Now we're back to normal. And maybe you keep the streak up for a while, but I think one of the best things you can do when you go on a streak like that, and this is one thing I said years ago, and I've said it here before too, because we all say if you have a series of losers, if you lose 3 in a row or whatever it is, go back to paper trading, practice trading, which is not bad advice. But what happens if you have 3 wins in a row, especially if they're 3 big wins? Now you're on the opposite spectrum of the emotional side. When you get beat down, you're on this, it hurts, and you're frustrated, and you're like, and your confidence is shaken, and you're like, I don't know what to do. Do I keep trying? Yeah. Then you go back to T-ball, whatever you got to do, right? Um, but when you have big wins or you have a series of wins, then you go again to the opposite side of the spectrum where you are now euphoric and you start to get into that fantasy land and you think it's going to continue and you start, well, I can do this, and then you lose focus on making good decisions. So if you get in that place where you've had a bunch of wins in a row or a couple of big wins and you find yourself mentally going to that space, like, oh man, let's order the Benz, all that stuff, catch yourself, reel it back in, put yourself back into reality and stop fantasizing about stuff and go, okay, this is not, I'm not that good. Okay. There's the reality. Trading is just like poker. It's a combination of skill and luck. You have to analyze the situation. Same as baseball, right? You analyze the situation. What's the inning? What's the outs? What game are we in? Where are we this? There's a whole lot of pieces to analyze. And based on that analysis, you do this and you do this and you do this. You make decisions on how to adjust things and how to do that. Football, any sport. And trading is the same way. You're analyzing the situation saying, I think this is probably the best move, but we don't know, right? Until you play, and I'll go to poker because I'm familiar with it, is that, you get 2 cards. That's all you have. You don't know what card, you have 5 more cards that are going to come up. You don't know what the other people have. There's so many unknowns that you can't know about. So you have to play the odds. You have to look at what you have, look at the situation, how many people are in the hand, how many people have bet, what have they bet, have they done this, have they done this? And based on that information, now I got to decide whether or not I want to take the risk on this. Is it good enough to take a risk? Is it a setup that's worth playing or not? And then if it is, then how do I play it? And then if I do decide to take the initial risk, what do I do continuing? Because in poker, you bet after every round. You got 3 or 4 rounds of betting in Texas Hold'em. And that's part of where the scaling thing comes in, right? For me, at least. because I'll scale in. If you're in a poker hand and you have a good hand and you bet big in the beginning to try to drive everybody out because that increases your odds. The less people in the hand, the better your odds are. If you got 5 people in the hand, you're playing against 5 people. You only have a 1 in 5 chance of winning from that spot without knowing what people have. If you raise the bet big and get everybody to drop except for one person, you just went from 20% to 50%. So there's lots of strategy like that involved. But then once the cards come out, now things change. So you don't, maybe you continue to bet big if you get good cards. If you get some, if the flop comes out and now your hand improves, then you add more money into the pot. So you find a setup, find a pattern, let's say, which is what we'll talk about as soon as I stop rambling. Right, Brenda? Um, so you find a setup, right? Same as finding aces in your hand. You find a head and shoulders. There's lots of them showing up right now. It's one of my favorites. You find that pattern, you analyze the pattern, you say, okay, based on this pattern, if this and this happens, I'm going to get in, I'm going to do this. And here's my entrance strategy, here's my exit strategy. It's the same process in poker. I got a pair of aces, okay? I'm on the button, so I'm last to bet. I get to see the action before it gets to me. Nobody else has bet. Everybody else has just called the pot. They've just called the blinds. So I've got a strong hand. I got a killer pattern. It's the best pattern there is. My odds are 35, 40% of winning if everybody stays in. If I can knock most of these people out, I increase my odds. I double my odds of winning this hand. So I'm going to bet big. So in that case, I'm going to bet a lot more money. If I get a really killer head and shoulders, the volume looks good, everything looks good, and the market is in, everything lines up, I'm going to bet big. I'm going to put more money into that trade. If I'm not sure yet, if it's still kind of like, the analysis is good, but it's not that, there's not a good sign, I might just nibble on. I might just put a little bit in the pot. Maybe I'll just, buy 2 or 3 contracts or 5 contracts. And then if it keeps going, if the flop comes out and I get cards that look good and the thing continues to look good and the setup continues to develop and get better, now I can add to the pot. I can put more money in the pot. Is there still a chance that something could happen and the other player draws out and gets a better hand? Of course. Could something happen in the market that it goes against me and, the profit that I have or had is gone? Of course. That always happens. I mean, it's the nature of the beast. But anyway, the key is to finding something that you know that you can relate trading to and recognize the cycles that you go through. Just like market cycles, stocks go through cycles. We as humans go through cycles physically, mentally, emotionally, and they really are pretty much all the same. Right? Yeah. Oh, yeah. Trust me, Jennifer. I understand. Um, And it's funny, actually, a few years ago, I was doing one of these and I started going through this scenario of, placing a stop and the stock gets close to your stop. And so you don't want to get out because you don't want to take a loss. You don't want to be a loser, right? So you move your stop and you do this, you do this. I started going through this and started explaining the emotions behind it and this and that. And some guy typed in a message. He goes, did you like tap my, my, my thing? Are you watching me trade? Are you like reading my mind? I'm like, no, I just know because I've been there. And as humans, we process things very similarly. We have little differences here and there, but mentally and emotionally, we go through the same types of emotions in certain situations. So I know exactly what you're going through because I've day traded. I've done so many different types of trading in 25 years that I've seen probably most of what is possible out there. So, and I've narrowed it down to this is my style. It took me a long time, but finally figured out that's so. You know what's funny? Because you're saying that when everybody's doing good when the market's bullish. About I think I figured it was about 85% of my trades last year in 2024 were actually bearish trades, and I was still in the Weekly Whispers account that I traded with on Omega charts was up 131% with 85% of them being bearish. There's this group on Facebook, like everybody knows if you're making bearish bets in a bullish market, you're losing money. Like, and he's a rookie. He may have been doing it a long time. He posts all this stuff. We're doing this. He posted something about the wheel, and the wheel is where you're selling puts to acquire stock, and then selling cover calls if you get put to stock. That's a wheel. He's explaining an iron condor and calling it a wheel. And I just simply said, I just tried to gently correct him, like, you're just explaining an iron condor. with one little tweak to it. But this is a guy, and this is where I kind of he's got an ego so big he can't. Well, I should say it's weak. People that have an ego like this that are arrogant that can't admit that they're wrong and acknowledge that somebody else is right, they're weaklings, and that's what he is. He doesn't have the emotional strength to say you're right. And I literally went and got the Google definition of iron condor and said, here's what you're explaining. You just took this long explanation, and that's all you're doing right there, but you're tweaking this one thing. Explain it to him in very simple terms, and he still just he can't admit that he was wrong and just say, oh, and he keeps calling it my strategy. He thinks he found gold because he discovered a new strategy which has been around for 3 decades. I just and I call him out. It's like, dude, first of all, your ego's so weak you can't even admit that you're wrong, which means you'll never succeed in the market long term. If you can't admit that you're wrong, you are going to die eventually in the market. Because I'm wrong 60, 70, 80% of the time. And I'm still profitable. I don't have to be right that often. And I don't care if I'm right. I got rid of that idea that I need to be right because I don't need to be. All you have to do is manage your risk reward properly, manage your mindset properly, and you're fine. There's the key. Set the stops and keep them. You've seen the risk reward thing, haven't you, Jennifer? Did I show? Oh, you must. Yeah, you just said I've been bearish forever. You are correct. Well, since 2000, 2020, I think. But that's the beauty is I can be bearish. My macro view can be bearish. The market can be going up, and I can still trade either way. It doesn't matter which way the market's going. That's why I don't care. I can separate my macro perspective, what I believe the economy is headed for, and still trade profitably. So just because I'm bearish on the big scheme of things, and the funny thing is that while the overall market is going up, y'all know about the Mag 7, right? It's what, 30, 35%, 37% of the S&P. So you have this, tiny, tiny percentage of stocks. Well, it's 7, so that's out of 500. What is that? 0.125%. But that accounts for a massive part of the market looking like it's going up. When there's 8,000 listed stocks, and a huge percentage of them have been in downtrends for 2, 3, 4 years since 2020. There's a lot. It seems to be a very mixed market. It seems to be like 50-50. I don't know what the breadth rating is, where the breadth is. I used to have that on here and keep track of it, but it didn't really do anything for me as far as, helping me trade better. So I don't need to look at it. But from a macro view perspective, if you've got a ton of, you got a 50-50 chance. It's a stock picker's market. I've been bearish, but I've also said, I think it's going to be a stock picker's market for a while. In other words, we're not going to be bullish or bearish. We might have 1 or 2 years where we're up or down, and then, we go down for a couple of years. Because 2020 was crazy with COVID and all the cash pushed in. But then 22 was a bear market. 23 was pretty much sideways until Powell came out and said they were going to start cutting rates in 24. And then it rocketed north. And you see what's going on today. Even though unemployment came out lower, the market's getting blitzed. And I know there's tons of people going, this doesn't make any sense. Well, guess what? The rate cuts that people are all wanting, which the whole market's been infatuated with for the last year and a half, they ain't coming. They got less than they expected in 2024. And when the data keeps coming out good, that means the Feds aren't going to cut rates, which is foolish anyway. The Fed rates are not that critically important to the overall economy. Mortgage rates are important. Mortgage rates have gone up, even though the Fed's cut. And so many people get those mixed up and they don't understand. They're not directly correlated. Mortgage rates are based off of bonds. And because the mortgage market believes that this government, even with Trump, is going to keep spending money, they're not going to cut back. And Biden has blown the most amount of money into the economy in history. That's the reason the market has still been elevated for the last year and a half. The government is spending so much dang money. There's so much money still in the economy. That's why inflation is still a problem. And it's going to continue to be a problem unless Trump comes in and takes an axe to all the spending, which it's not even Trump. That's Congress that has the purse strings. Until government spending drops off, mortgage rates are going to stay high or go higher, I think. That's my expectation. I don't know. None of us have a crystal ball. Congress could come out and say, hey, we're going to cut out 40% of the budget. If they were smart, they'd go look at what Coolidge did. I'm pretty sure it was Coolidge. I haven't, there's a documentary about him that I think he was in the teens. He cut government spending in half and he cut taxes in half. And that's because there was a Great Depression in the late teens. It might have been early 20s, but it was somewhere in there, right? The depression is 6 quarters of negative growth. There was basically two back-to-back depressions in a decade apart. But when Coolidge came in and cut spending in half and cut taxes in half, guess what happened? The economy roared. You probably all heard of the Roaring Twenties. That's why we had the Roaring Twenties. Coolidge came in and took an axe to everything. He said, of course, back then we didn't have all the social benefits, and people depended on Social Security and all this other BS. So it was significantly easier, I think, for him than it would be now. But there's a lot of junk that the government needs to get rid of. And it would help. You know, I think that's the only thing that's really going to get this market to turn around. That's why I think this year is probably going to be pretty bad. I'm hopeful that Trump will turn things around, but I don't think it's going to come without a lot of pain. There's going to be a lot of pain no matter what. So, I mean, just put it in the context of your own personal life, right? If you go out and spend $100,000 on credit cards and your income is, less than what you're spending, you're going to be in trouble eventually financially. So, yeah, it's the bonds are going higher because there's more risk there because the government keeps spending money. There's so much freaking debt. I mean, we're at what, 130% of GDP? That's a lot of risk. I mean, the government could literally default on the bonds. So they're tanking in price, which increases the yield. So, excuse me. All right, I'm going to buzz through this right now because, yeah, I mean, that was, hopefully that was some good information because I spent a long time on it. But at the same time, mindset is the vast majority of training is about mindset. That's why I love the topic. That's why I talk about it so much because it is the most important piece to everything. If you can't keep your head straight, you're not going to make it long term. Basis candlesticks. Most of you have probably seen all this, so it's the most emotional part of the day, except for you, Jennifer. Right now, no, I'm just kidding. Open is it's basically kind of considered the rudder of the day. See there in the middle of the screen. It's a Japanese proverb. It's the first hour where the overnight news is being filtered out. Just like this morning. I mean, we got most stocks gapped down this morning because of the employment news. So the close the most will be his margin calls, right? If you're in a position and you're close to getting a margin call and you're going to get a call from your broker tomorrow, guess what? You're going to get out of that position most likely because you don't want your broker to have to close it out for you. So you're going to close it yourself or do something to avoid the margin call. Which, especially when the market turns to the south, like it is right now as we speak, that's where the selling can cascade. And not to get too deep into history, but that's what caused the 29 crash was margin calls. Well, it wasn't the margin calls. It was the fact that your margin requirement back then was only 10%. Now it's 50, right? You put 10 grand in the account, you have 20,000 buying power. Back then, you put 10 grand in the account, you had 100,000 buying power. Because people were like, hey, and the market was fairly new, right? It wasn't that old. It started in when did the actual Dow start? 1903 or something like that, 1916? I don't remember. It was either late 1800s or early 1900s. So there wasn't a lot of history there. But you put $10,000, you go buy $100,000 of one stock. Say you buy 1,000 shares of $100 stock. If it drops to 90, if it just drops just 10%, your money's gone. And now the broker's at risk. They ain't going to leave it there. And then you literally, on one trade, just lost your entire account on a 10% move. Whoops. That's the reason 1929 was so bad. So we're not likely to have a crash like that because there's a lot of stop mechanisms in place right now. Dang, stupid post-nasal drip. But this is basic candlestick construction. I think, look at the list of names. Yeah, I think all of you know this, so we'll buzz through it. I know sometimes we get newbies. There's a lot of new people I know on the YouTube channel. You got the real body and then the wicks, or the tails, shadows, whatever you want to call it. If it's open, and I use black and white, and if you talk to any old school technical analysts, they will tell you, or the super OCD, like crazy, like they, they don't use the red and green. They don't use colored candlesticks. It's black and it's white. That's it. That's real technical analysis. I don't care what you use. Use whatever you're comfortable with, whatever you like. But if you want to be considered a true technical analyst, you have to use black and white, which is kind of stupid. But and I'm sure in 10 years that whole mentality will be gone. So if it's bullish, right, the opens at the bottom, close at the top. It's like a balloon with helium, right? You got the highs and lows. Bearish candlesticks open at the top. It's like lead, shaved head, shaving bottom. Maribozu, where there's no shadows or very, very tiny shadows that you can't see. Those are just indications of strength. If there's no shadows, that means it closed on the open or high, or the open. It closed on the high or low. So the open and low or open and high were the same, which just indicates strength, right? So here on the left side, right, if it opens on the bottom and the bears don't get any traction, they don't even tick it down one tick and it just takes off, that's extremely strong for the bulls. And Maribozu is the strongest because the bears didn't even come in and try to sell it off at the end. So the bulls opened it, ran it higher, and they closed it right on the high, and vice versa on the bearish one, right? Spinning top, cover that real quick. What does it mean? It's basically just indecision. Same thing with doji. It's a tie. I like to analyze that compared to like a tug of war match. It's a small real body. Size of the shadows is not really important, even though we can use that because if they're really long shadows, you might call it a long-legged spinning top. That just indicates that there was a lot of volatility during the day, right? Most of the time they're kind of standard, like you see there, like these. I mean, they're pretty normal sized. But if they're really wild and crazy, then at least you know it was a crazy day. Super high, super low. Doji's the same thing. It means indecision. Generally speaking, from conceptually speaking, here's the deal. The smaller the candle, the more indecisive it is. So if you get a small candle, right, you have this huge candle that's very, very strong from the bulls and the bears perspective. The smaller that body of the candle gets, the more indecision there is. So it's like a sliding scale, right? That's the way I think of it. And a doji is absolute perfect indecision, where the open and close are exactly the same or super close. It's all relative, right? You get on the Dow, it could be 5, 10 points. It could be, well, what's the Dow at? 40,000, 42,000? I mean, even 20 or 30 or 50 points would probably be considered a doji on the Dow. So keep that relativity in mind. Man, these things aren't working. My mom told me to use this Prilosec or whatever, and it got rid of her. She was having the same issue, the same cough thingy. She started taking that, and it cleared it up within 3 weeks, she said. And I was doing that, seemed to clear it up, but I got this other one. They didn't have any last time I got some, so I got whatever it was called. It's not working as well, so I'm gonna finish those up and then I'll get back to the other ones. And hopefully this stupid cough will go. But I'm gonna go through like 4 or 5 patterns real quick. And the beauty of these is really hitting the core patterns that you're going to see more often than not. And all you have to do is flip them over, like a hangman. Right? It doesn't sound very good. The connotation is pretty nasty. One thing to keep in mind and remember about patterns, and this goes for Western patterns, the head and shoulders, triangles, all that stuff. Same thing with candlesticks, is the move in front of the pattern is important. If this comes at, well, if this one, if you flip it over, the pattern, you don't actually flip this one over. This one, it's just the position of where it shows up. If this shows at the bottom of a downtrend, like where's my so let's say you got candles coming down, right? There's just candlestick lines. If you have this right here, that is no longer a hangman, that's actually a hammer. So this one you don't flip upside down. It's the same, the pattern looks the same. It all depends on where it comes at in the trend. If there's a trend or a move, it doesn't have to be a long-term trend, but if you get a 5 or 6 day move to the upside, and then you get a hangman like this one, that's bearish. Kind of. Here's the caveat to understand with hangman is that the color of the candle, that's why this is gray. The color of the candle doesn't matter. It can be black or white. red or green if you're goofy. Um, I'm an old school kind of guy, so I'm the black and white candlesticks. That's all I use. I don't like the other stuff. Anyway, uh, the reason that this is less bearish is because when you look at just the basic construction of the candlestick, it opened here or here, right? And the bears drove it down during the day to a low, but the bulls actually rallied it and closed it close to the high, right? So hangman's got technically it's supposed to have a small body. So the bears had control, but the bulls actually finished it closer to the high than the low. So the hangman, while it is a bearish reversal pattern, it's actually got a twinge of bullishness to it. So you got to keep that in mind. So, are you guys all seeing my screen? Andreas is saying that can't see my screen. From what I see, at least the thing that I'm looking at, it says I'm screen sharing and it's showing me exactly what I'm seeing on my screen. So, didn't it seem like that happened last time with you, wasn't it? Okay, okay, that's what I thought. Yeah, I'm seeing it too. That's why I have that there, so I make sure I'm seeing that. So, yeah, what was it? What caused it last time? Did we figure that out? Yeah, because that's weird. Because you should be seeing everything I'm doing. I don't know what's causing that. It might be a browser thing. Maybe try a different browser. Oh, you got it. Okay, good. Open your eyes. Oh, I forgot I had these on there. Body's at the upper right, shadows at least twice the length. The shadow should be at least twice the length of the body. Now, I mean, obviously, you can, if it's 1.8 times, I'm not that OCD anymore. I used to be. Used to be like, oh, it has to be this. It's like, no, you got to, step back and look at things more conceptually. Understand the concept of the pattern, what it means, and what the action of the candlestick and the shadows mean. Once you learn to interpret that, then the rest of it's not that critical, right? Bears confirmation is more important. And this is one thing too, and I'm sure you guys probably have all been through patterns in Flash, so you should know this. But the term reversal, because we call these reversal patterns, it's a misnomer. In other words, it it doesn't mean that it's going to turn and go the opposite direction because stocks go up, down, and sideways. So in this case, the picture you're looking at, the stock's going up. It could go sideways or it could go down. It can do an absolute 180 in reverse, but oftentimes it just goes sideways. So reversal is basically just the trend is probably going to change, is what it means. It doesn't mean reversal like automatically. We never know if it's going to happen or not. So that's why I like to nibble. Oh, I put the entries in here. That's right. So this is a crazy entry. If you're doing it at the close of the day, you wait till the close and you see a hangman on a chart and you're like, "Ooh, I'm going to get in there and buy some puts or short it, whatever." There's no confirmation. That's very aggressive, extremely aggressive. That's why I labeled it crazy. The more conservative entry point is here. It's more conservative than this. It's still an aggressive entry point. If it gaps down the next morning, that's still a pretty aggressive. The more conservative entry point is to wait for the close and see if it confirms down. So, but you decide. And that's where I scale. I love to nibble on things right here. And that, obviously every situation is a little different. But if you have a crazy entry point, if I'm going to drop 10 contracts into this, if it's a full trade, I might pick up one or two right here. So you know what? It's close to the stop. If it gaps up tomorrow and stops me out, eh. Or if it moves up tomorrow and stops me out, I didn't lose a lot. And then if it gaps down the next morning, though, I'm already up a little bit. Maybe I pick up two here, maybe I pick up two more, and then at the close of the day, round it out to all 10 because I have confirmation and buy the other six. The challenge that most people have with that type of thinking is that what happens is you pick up some options here and maybe you pay $5 for them. The next morning they're $6. You're like, oh, I don't want to pay more. I'll just wait till it gets back here and then I'll buy them at 5. And then here at the end of the day, they're worth 8. And you're like, I should have bought them all right here. Well, yeah, you should have, but you didn't know that this was coming. You didn't know that this was going to happen. And that would have been crazy to load up on a full position right here. But here's the beauty. You got 2 at 5, 2 at 6. So your average cost basis is 5.5 on 4. So when you get here, you pay $8 for them at the close. Well, your cost basis is probably around 7. So at the end of this day, even though you just paid 60% more than you paid at the end yesterday, you still have $1 of cushion before you're in a losing position. Even though your cost basis has gone up, so you're now at $7, you now have 10 contracts instead of just 2. So you have a reduced risk and more leverage by doing it that way. So if you haven't scaled in because of the mental hurdles that I just explained, try it. Do it on paper and then try it for real and watch how different you are mentally and emotionally when you do something like that. It's mind-boggling how much more relaxed and how much calmer you'll trade. Bearish engulfing pattern. Bulls are in control. Bears take over. Entry points, very aggressive places at the end of the engulfing day. The more conservative, well, second, less aggressive is at the opening the next day, and the most conservative is at the end of the day. And all you have to do is flip these things over, and you have the opposite, right? Bearish engulfing pattern, you flip it over, it's a bullish engulfing pattern. That's the beauty of patterns. That's the beauty of patterns of flash. Well, there's 30 or 35 patterns in there. You really break it down about 4 or 5. Morningstar, bears are in full control. They lose momentum. Bulls take over. Boom. Bulls win. Entry points. Oh, no. Oh, morning doji star. I don't know why I put that in there. It's basically the same thing. Morning star, morning doji star, evening doji star. You learn one pattern, you got 4 of them down. It's beautiful. So if you haven't had patterns of flash, I'd go get it. If you want to learn more about all patterns, not just candlesticks, but Western patterns, there's all the foundational technical analysis in there. I think it's 6 to 8 hours of on-demand video. The quizzes, the flashcards, you guys all know what's in there. If you don't know what's in there, go find out. You got a 2-week trial. And usually what I tell people is go do the trial, take the quizzes. There's 4 different quizzes in there about each of the 4 different sections of videos. Go take the quizzes. If you don't ace them, you need the tool. Keep it. If you ace them, then cancel your trial. You don't need it. I mean, it's that simple. All right. Now, somebody recently, I look at the spies. Oh, the SPX, head and shoulders. Yeah, let me get over the overall market. Where did you get that from anyway? This is not live, right? So on Omega charts, you can get streaming. I don't know if y'all have it. I do because I'm special. Not that kind of special, like just kidding. You can tell I like to have a little fun there. Um, but yeah, the indexes do not update real time, and the other ones are it's streaming, but it's got a 15-minute delay to it. So we'll actually let's go look at the spiders. I think I have the line drawn on there. If not, we'll put it on there. Oh yeah, I do. Okay. So it's a little head and shoulders. It's not very big. It's not. I mean, it's actually a nice look. Oh, there's today. You see how it just updated if you were watching. And we're breaking the neckline right now. Yeah, Carlos Mencia kind of special, huh? He hadn't been around for a while. I don't know what he did, but left shoulder, head, right shoulder, another right shoulder, which actually is even better because it's a lower. We got lower highs now. On the short term, at least, we got lower highs. Long term, higher lows, lower highs, or higher lows, higher lows, higher highs. So long term, we're still bullish. Midterm, we're still bullish. Short term, we are bearish. We got lower highs, and today we had lower low here, just barely. But today we're making unless this thing bounces by the end of the day, which I don't see happening. It's possible, but I don't think it's going to. Then we have lower lows. So, and you can see up here at the top right corner, it's moving, but it tells us it's at 9:37. So that's exactly 15 minutes behind. So we can see, an updated thing. It's just a little bit delayed. Yeah, Phil's 576.40 right there. You got that right on the nose, huh? Yeah. Will it hold? There's almost an island reversal there, but those are rare, very rare. Um, yeah. So how this plays out, who knows? I mean, theoretically, the next major support there is about 565 or 5650 on the SPX. And that would actually, that's close to coinciding with the head and shoulders measured move. So I'm expecting this to come down to this area and hold that level for a minute, maybe for a while. It might just crack right through it. It might bounce really quick. None of us know. But like I say, going back to the kind of poker analogy, is you analyze it. This is an ace. These are aces for me. Head and shoulders. This is the snake eyes. Whatever you call it. What's the word the term they have in poker? I can't remember. Bullets. That's what it is. Bullets. Um. So yeah, this is my favorite pattern on the Western side. Right. Morning star, evening star on the or engulfing patterns on candlesticks. So those are the two favorites I have on there. But and you can see. I mean, look at this. Since we're talking about candlestick patterns. There's a bearish engulfing pattern. It's not, there's only 3 days up, but it's essentially this one right here. Even though it engulfs the previous day, that would not be classified as a bearish engulfing pattern because it came after a drop. If it's after an upward move, that's different. I wouldn't consider it super strong because it's only 2 days up before it engulfs. But this one right here is a good one. And you can see, like I said, the term reversal doesn't mean it's going to turn on a dime. And this is a perfect example of what often happens is you've got a 4 out of 5 days that's up, big bearish engulfing pattern, which stops the uptrend, and it just went sideways for 2 weeks, and then had a big drop down, and then some kind of I don't remember. This is the election, so it sold off big time for whatever reason. But we had the drop down, and then the news came out, and news can change everything, and that's exactly what happened here. If that would have happened, if the victory would have gone to another person, Kamala, it probably would have continued to tank. I was just saying. I don't think that the market was not excited about her at all, and it's pretty clear by the reaction they had to Trump winning, what the market did. So love him or hate him, the market likes him. I don't know if that's gonna keep going, but we'll see. So, um, depends on your perspective, Jennifer. uh, well, yeah, that's where I mean, long term we're bullish. Is that going to change? Well, let's see. It's a good point. I'm glad you bring that up. So let's draw the trend on here and look at where that trend could end. And this is not a super strong trend because we really only have two hits on it. That one and this one. I mean, you could call this two, but they're like 3 days apart, so it's almost the same. A trend, you could draw a trend with two spots like I just did. There's not a third hit on it. So actually, looking at it now, we could, if the long-term trend stays intact, it'll stay above this line. It'll either hold this 576, maybe it'll come down and it could keep going. But that's not a real strong trend line. And I don't expect it to because, well, there's news coming out. Next week is going to be huge. We've got PPI on Tuesday, CPI on Wednesday, and what is Thursday? It starts earnings. Earnings start on the 15th. JP Morgan comes out the 15th and a couple other big banks, which is actually that's Wednesday, I think, isn't it? Yeah. Yeah. So I think PPI is Tuesday, CPI is Wednesday, earnings starts Wednesday. And this earnings season could be really interesting. There's some companies that are absolutely killing it, and other companies are getting absolutely destroyed. And that's been going on for a year or two. I'm gonna go look at the earnings announcements from lots of different companies. I don't know. I'm just grabbing Walmart, just going off the top of my head, trying to think of one. Well, there's one back there. This, I think, was an earnings. One of these was an earnings announcement. I'm trying to think of one that there's a strike going. Oh, of course, it's going to die on me. Got a few minutes left, and now it's going to. I didn't know they're going on strike again. I think I would have known that. My neighbor's a longshoreman. He didn't say anything about it, but maybe it's a different one. Um, yeah, so there's J&J. That was beautiful. Uh, there's why I love Head and Shoulders. And I don't know why these lines have moved, but I don't know why. But yeah, this one was absolute money. This is fun when they play out just like that. Of course, right now, 2 months later, I wish I'd have held on, but I got a bulk of what I got everything that I came for actually. So, um, trying to think of companies that have had disappointing earnings or something like that. Now, why is this thing bogging down all of a sudden? What are they striking over now? Don't they make enough money? I mean, I don't know. I mean, I don't know exactly what my neighbor makes, but I know what the average longshoreman makes, and he's been at it longer than the average. So I know he makes a darn good living. So, of course, it's all relative, right? Any stocks you guys want to look at in the last couple of minutes? If this thing will work, I'm waiting for it to bring up Nvidia. But yeah, next week has high potential to be extremely volatile, and I'm expecting earnings season to be overall negative, generally speaking, for most companies. Just because of the economy is there's a lot of holes in the economy, even though unemployment, is technically solid. Uh, I don't know why this thing's bogging down. Might have to go a few minutes later if it's not gonna. You can see that right on the screen. Yeah, it's just sitting there circling, still waiting for it. Um, it's gonna come up and say that it's give me a chance to close it. I don't want to wait. Close it and reopen it. There's what gold's doing. See if we can look at those. Okay, I got three we'll look at really quickly once this thing loads up. So yeah, and that's the thing in 2025, and there's the one thing too is, and part of the reason that I'm bearish is you've got the commercial real estate. A lot of the loans that were done, a lot of people don't know this. Commercial real estate, they don't have 30-year mortgages on commercial real estate. A lot of them are interest only, and they're 5 or 7 or 10 year notes. They're short term, and then they refinance them, right? Based on the new conditions, right? Because the banks don't want to have risk out there for 30 years on a commercial building that could lose half its value. And a lot of them have dropped tremendously in value because companies aren't renting them. Why wouldn't they? And a lot of these little mom and pop shops have gone under. So there's a lot of these little strip malls and stuff, they're not full. So their valuation is based off of the revenue it's generated. Well, a lot of them have dropped off in revenue. And then you got a lot of these apartment buildings that were built with really low interest rates. And now they have to refi those. So this year, there's a lot of commercial real estate. There's like $2.7 trillion worth of commercial real estate that is underwater. Most of it's underwater, valuation wise. And they have to be refied into higher rates, which is another reason that I think inflation is not going to tick down because when these people have their mortgages or their commercial payments go from $15,000 or $20,000 a month for this $3 million building to 25 or 30, their rates or their cost of covering the loan goes up by 20 or 30 or 40%, they're going to have to raise the rents. Or they walk away and the bank's going to take it back, the building is back. Uh, so that's a big storm cloud that's kind of hanging over that a lot of people aren't even aware of. They don't even know it's there. And the housing market, with the interest rates going up and valuations still elevated, one's got to crack. And there's parts of the country that are already doing that. There's pockets of Florida that are just getting blitzed, partly because of the hurricane. Now California's going to have major problems. I mean, their valuations are zero because it's raw land. Insurance companies are getting hammered today, which makes sense. Uh, yeah, so either interest rates have to come down or housing valuations have to come down because it just can't stay elevated like this forever. And like you said, Jennifer, I've been bearish for a long time. And this goofball on Facebook, trying to be nice, call him a goofball. He's like, he keeps saying, well, you've been called for a crash. And I'm like, well, it's going to eventually happen. And I don't know when it's going to happen. I don't have a crystal ball. I make it clear I don't know when it's going to happen. But yeah, I don't think it's that far off. But I've been saying that for 2 or 3 years. But then when you look at it, so did Michael Burry. Michael Burry was talking about, in 2006 is when he started loading up on puts, if I remember right. So it was a 2 or 3 year period where he was preparing and loading up, getting ready because he saw the storm coming. He knew so you got to be kind of like a weatherman. And if you see the storm brewing, then you got to prepare for it and be ready for it. And it might never come. Well, it's going to come eventually, right? There's always a storm. You just don't know where it's going to land or how hard it's going to hit. Just like a hurricane, right? You never know where it's, well, I mean, you can project and you can figure it out with some analysis. But when things happen, you don't really know exactly. So, and I mean, and Buffett, same thing. He's got like 380 or $400 billion of cash on the sidelines because the market's too rich. One of the reasons Buffett has such a huge outsized return is because he understands, looking at the overall market, that it's way overvalued. And he has the patience to sit and wait it out. In the late 90s, people were calling him an idiot. You're missing the dot-com boom. You're missing all this. You're missing out. You're missing out. You're missing out. What an idiot. Da, 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 da. Calling him names. You're stupid. And then when the crash happened, guess what happened? All those other idiots were the ones that were broke and on their face. And Buffett had a ton of cash sitting on the sidelines. And when it dropped, he loaded up the truck. He did the same thing in 08. He cleared out of most of the stuff. These valuations are crazy. They're too high. So he cleared out most of his stuff. He only owns the vast, like 90% of his portfolio is in like 8 stocks or something. So all these people that talk about diversifying your account, hogwash. He does good quality companies, but he's mostly out of this market right now. He's still got positions because he can't move all of his stuff to cash. But he's got a ton of cash in the sidelines waiting for the valuations to come back down to reasonable. It might be 2 or 3 or 4 years. And then when he does, he'll back up the truck. So, but there's Boeing. Speaking of candlestick patterns, there's a nice little hammer. Is that today's? Yeah, it is. Nice little hammer taking place at a support level there. So Boeing could possibly move higher from here. I mean, I don't know that this is going to follow the market exactly, but they've been having some issues obviously lately. So I would wait to see where this closes today because we still have, 3 hours in the market. That's me. But this might be a place to nibble if you're bullish and you think Boeing's going higher. Oops, I don't know why it does that. But it's already had this big run. This is where I get a little skittish because the odds of this rally continuing, it has had a nice pullback, but it's only a couple weeks after a 2 month pretty solid rally. I mean, 40 points, that's good 30% or something. So I would want to see either a little bit bigger pullback or more testing of this support level. That's just me. I mean, I might maybe take a small position here, but I wouldn't put a lot of risk on it here because of those things, because it needs either a bigger pullback or more time to find its sea legs, if you will. Micron. Oh, that's ugly. Kind of stuck in this channel. The long term. Yeah, it's pretty much in the middle of that right now. There is a. Yeah, that's close enough. It's a little bit off, but basically right kind of in the middle of that spot. There's some little support, which is kind of sitting out right now. Yeah, this has gotten really gappy. I don't know if I personally, I'm a breakout trader, so I'm looking for something to break out. So something in a channel like this, I would wait for it to break out of here if I was bullish, thinking it's bullish, or even if I'm not bullish, it doesn't matter what direction it's going. If it breaks down here, I would maybe, if it breaks down and maybe play it to here. I mean, it's still 12 points. That's 12%. You could get a single out of it. But yeah, usually until it breaks out of a range. But some people trade the range, and I do occasionally if the setup's nice enough. But all these gaps, and I mean, there's kind of almost a island reversal. I mean, if it wasn't for all this down here, it was in a downtrend. If that happened right over here, that'd be an island reversal. You get just this little island hanging out there. It's a very strong reversal. So maybe, I mean, you could treat this as an island reversal, and if you're bullish on the market, maybe nibble on it right here, put a stop just slightly below here. And then if it takes off, you add to it if it breaks out, or there's a billion different ways to do it. And yes, I said that with a B because there really are. Amazon, all-time highs. I would expect it to come back down to here. But you've also got a little, I don't know if I'd call I wouldn't call it a pennant, but oops, that's not what I wanted. I mean, it's close. A pennant, yeah, I mean, I don't know if I'd call that a flagpole if it's steep enough, but and it's not really small enough. But conceptually, it's kind of a mix between a pennant and a symmetrical triangle, or it's actually more of a wedge. And if you confuse a triangle and a wedge, they're not the same thing. They're similar, they look similar, but they're not. There's little nuances that are important to distinguish. So it does look a little bit like a bullish wedge, actually. So if this broke out of this upper range, and if the market went up, see that's the other thing that I'm looking at is if the market is going up, then it's more likely. I mean, something like 70 or 80% of stocks follow the overall market. I think it's this year and last year not necessarily that high. I don't know what the data is. I don't know if anybody keeps the data, but it's probably off a little bit now. It's probably lower than that, I would think. It'd be interesting to see that actually. I wonder if that data is anywhere. But yeah, I mean, if the market turns around, if it finds a bottom, which I can see it coming down to the 200-day moving average, which the Russell's almost there, but the Dow still has a decent ways to go. The Nasdaq and the SPX both have a pretty big drop to go to get to the 200-day, but I can see it doing that possibly. So I wouldn't take a bullish position in this right now until this market, the overall market stabilizes. Which I mean, we might today. We might at this point right now. If in the last few minutes, okay, I'm gonna wrap with this. So that's what I'm looking at, right? So I got the SPX, NASDAQ, Dow, and the Russell. The left side are the 5 minute charts. The right side is the daily chart. You see the 50 is blue, the 200-day is red. Both simple. So the bottom chart is a Russell. That's almost the 200-day moving average. And the Dow's got a little ways to go. NASDAQ has quite a ways to go. It's just breaking the 50-day today. Everything else is broken below the 50-day. And the SPX doesn't have a long ways to go to the 200, but it does. So, but you can see here in the last hour or so, we've rallied back up. So if the bulls come in and start pushing this higher today, then we'd have a hammer pattern, which is obviously bullish, right? Especially if it found a support. So this is one of the things when you're looking at charts, you go, okay, if this happens, then it's going to be this pattern. And how am I going to position myself if that happens? So you play different scenarios in your mind, or you can write it down, do whatever you need to keep it straight. But I'm looking at this going, we already have on the NASDAQ itself, we've got a little bit of a hammer pattern showing up. But again, this is, we're still 3 hours to go in the day. So, but if you're bullish on this overall market and the bulls come in and rally this thing into the close, that would definitely be a bullish finish to the day, which could give us a pop on Monday. Could be in the keywords. We just don't know. So if you're scared, if you're nervous, but you think it's going to happen, then just pick up a tiny position, get one or two contracts. Or if you're buying stock, just to take a little tiny bit. And then if it moves, you're happy. If it doesn't, it goes against you and you get stopped out, you're not that unhappy because you didn't lose that much, right? So anyway, mindset, how to keep your mind at ease. This is the question that I've been harping on for a while now, is that you should be asking yourself, am I comfortable with the amount of risk I have in this trade? And if you can't answer that yes, you either shouldn't do the trade or you should adjust it so that you can answer that question yes. Thanks, Brenda. When don't I? I always have at least a couple of squirrels that I find and I ramble a little bit. I'm working on it. It's just hard. So it's, you get 25 years under your belt and it's like there's lots of little things you've seen. And so I hopefully can keep you guys out of the pits that I fell into. That's the ultimate goal, is to and help you get to that place where you're calm, cool, and collected. And you just trade. You don't get all upset. You don't get frustrated when you have a drawdown because you've learned to recognize and you've got it built into your mindset that That's normal. That's natural. And the goal is to make sure you minimize those downside, those downdrafts. If you can minimize the drawdowns, but you've already proven, right, Jennifer? You've already proven, Jennifer, that you can grow the account. You know, so you should have the confidence to say, I can do that again. Just do what you did before. But next time, instead of having that big drawdown, learn how to reduce the size of the drawdown. Don't allow yourself to well, keep your stops, right? And that's one thing you got to pound in your head is how much of that profit that you have would you have kept in your account had you held your stops and not moved them? Less contracts and keep stops. Keeping the stops is probably the biggest one. Less contracts, maybe. I don't know how big you're trading. Doesn't really matter, but you can scale out of those too. And that's always ask the question. Always go back to that question. Am I comfortable with this position I'm in? And if the answer is no, okay, what can I do to be comfortable? I've got 10 contracts. I've got 5 grand of profit. I'm not comfortable leaving all that on the table. Well, how much are you comfortable leaving on the table? Well, I'd be, if I had 2,500 bucks of risk, I'd be comfortable. Okay, then take half the position off. It's that simple. I mean, it's not complicated. Trading's not really that complicated. That's really what it comes down to. Is making sure you're always in a place that you are comfortable with the risk that you have. Because then you're not going to lose your mind, you're not going to freak out and make stupid decisions, because then you're going to trade in a calm, cool, collected place. Because you're comfortable with the risk you have. It's okay if I lose this. I'm prepared to give that to the market. And if you do, it's not a big deal. It's part of trading. Right? So just pound that question into your head. Am I comfortable where I'm at here? Or if you're not in the trade and you're going to get in the trade, am I comfortable with the amount of risk I'm taking? That should determine how many contracts you do, how big of a size you take. Yeah, sometimes you have to experience it, Jennifer. She said, "You guys explain it all the time, but you have to experience it firsthand, and then it sinks in, right?" Same thing. You try to tell your kids things, and they're like, "Ah, whatever. You're just an old man." And then once they experience it in life, they go, "Oh, that's what you meant." Yeah, that's what I've done. My dad told me stuff. I did stupid stuff. Same thing in trade, right? So, uh, I don't like to lose either. I'm extremely competitive. I don't think anybody likes to lose, but you got to put the term lose in context because is losing on one trade or just losing overall? If you lose your entire account, in my mind, that's losing. Losing on one trade, it's part of the business. No big deal. Just like a batter, in the majors doesn't walk up and strike out and freak out and lose his mind. Like, I'm a loser. No, it's one at bat. That's it. You got 165 games in a year, 4 at bats each game. You're batting 700, 800 times. It's one at bat. That's all it is. However, whatever you need to use to get that part into your mind, it's one trade. And it's important to take a loss on one trade so you don't take the big loss, right? Yeah, cost of doing business. However, you got to frame it in your mind. You can call it whatever you want. So I mean, I love that. And when I heard Ryan first talk about that, I started doing that. And then I realized it's like, you know what? Whether I call it a cost of doing business or I call it a loss, guess what that does for my feelings? Nothing. I still feel it. So you can, but if using that terminology helps you to reframe it and assuage your feelings, so your feelings aren't so raw and frustrating, then that's fine. But however, you got to get there. You got to get to a place where you're just stepping into the batter's box and hitting just like you do every other time. And you're not emotional about it. I mean, you're going to be emotional about it, but you're not freaking out. You're just doing your job. You're just doing your thing. You've done it so many times. You've swung the bat so many times. It's just part of the game. So, and that's taking losses as part of the game and striking out is part of the game. So, yeah, again, use whatever you have to get that concept into your mind and relate it to the trading game. So, and I got to shut up because now I'm way, way over. I just noticed it's like, whew. So, anyway, hopefully it's been fun for you. I'm always having a good time doing this. So, you're welcome, Andres. Thank you for coming. So, And we will see you all down the road. Have a great weekend, and we'll see you probably very soon. God bless. Bye bye.